Hello, I'm today Rex, and today I'll be undertaking an analysis of the financial performance of Goodman Group against the key performance indicators. Goodman Group is an integrated commercial property group that owns, develops, and manages quality industrial and office space assets. Goodman Group is one of Australia's largest listed industrial property groups on the Australian Stock Exchange and a world leader in the industrial property market. A key performance indicator is a measure used to help reflect organisational success of progress in relation to a specified goal. KPIs help monitor the progress towards accomplishing the strategic objectives outlined to achieve these goals. Today, I'll be analysing the financial KPIs of the Goodman Group. Financial KPIs are generally based on income statement or balance sheet components. A few of the accounting ratios used to measure the financial KPIs are outlined on the screen. However, these aren't all of them, but they do show the best reflection of the performance of the Goodman Group in relation to the nature of their work. The current ratio is the ability of your organisation to pay all of your financial obligations in 1 year. A ratio between 1.5 and 3 is preferable. Goodman Group currently has a ratio of 3.484. A high ratio, such as this, may indicate the business is sitting on a large amount of cash rather than reinvesting the money. Secondly, working capital is a measure of a company efficiency and operating liquidity. The working capital is usually calculated by subtracting current liabilities from current assets. It is an important indicator of the firm's ability to continue its normal operations without additional debt obligations. Working capital can be positive or negative depending on how much of the current debt the company is carrying on its balance sheet. In general terms, companies have a lot of working capital will experience more growth in the near future since they can expand and improve their operations using existing resources. Goodman Group currently has $883 million of working capital, showing that they have the ability to increase growth. Income and expenditure is the amount of money earned and spent by a business over a 12-month period. The bottom number is then the profit left at the end of the day. Goodman Group currently has $1,274.4 million from financial year 2016. This in comparison to the $1,208 million posted in financial year 2015 shows an increase in growth over the last fiscal year. Return on equity then measures your organisation's ability to generate revenue for each unit of shareholder equity. The ratio provides a measure of profitability and efficiency. A return on equity of between 15 to 25% is considered good. Goodman Group currently has a ratio of 16.42%, which is in the healthy range. Debt to equity ratio measures how the organisation is funding the growth and the effectiveness of using shareholders' investments. A higher debt to equity ratio is evidence of an organisation fueling growth by accumulating debt. Goodman Group has a ratio of 0.34 times, which shows low debt fueled growth. Lastly, the profit margin measures overall efficiency of a company and shows its ability to withstand competition as well as defend against adverse conditions such as rising costs, falling prices, declines in sales, or management distress. Profit margin tells investors how well the company executes on its overall pricing strategies, as well as how effective the company is in controlling its costs. Goodman Group currently has a profit margin of 60.8%, which is considered strong. In conclusion, it can be determined the positivity of the financial KPIs assessed show a strong financial performance of the Goodman Group.